Hey everybody, it's Paul here from Blossom. Finally got my Blossom t-shirt, got my harvest hat. I had a great time at the Blossom event on Sunday. I know if you were there, you guys had a great time as well. And I really got to give a shout out to Maxwell and Brandon and the entire Blossom team for putting on a fantastic day. It was, well, I mean, it's my first time going, but it was unbelievable. I had a great time. And of course, thank you to everybody who took the time to stop and talk to Sean and I. We're very humbled by how friendly and encouraging everybody was. We both consider Blossom to be part of our family now, and it was just fantastic to be able to spend time with all of you and have great conversations and meet everyone. And we look forward to the next event. Um, Also, I mean, I got to give a shout out to Harvest. Uh, Thank you so much for sponsoring the event, and thank you for everything you do. I know personally, I have about 40% of my portfolio is dedicated to Harvest ETFs, and make a lot of money from those guys. So I have nothing but gratitude for that. But anyways, guys, for today's video, we're just gonna cover a simple topic, but one that I get a lot of questions about, and that's how many ETFs, how many positions should you have in your covered call ETF income portfolio. A lot of times people basically say that I have too many positions, or they'll ask me how many positions should they have. And of course, guys, this is a very personal decision, and I don't think there's really a right or wrong answer. But I'm going to kind of go over some of the reasons why I currently have 40 positions. So first of all, one of the major reasons is for diversification. I like having multiple streams of income. I realize they're all covered call ETFs and there is some overlap, right? But there are different fund managers, there's different underlying holdings, there's different companies that are producing these streams of income for us. And I like it that way because I wouldn't want to have, like, having a job. As you all know, I had a job. The company shrunk down and laid me off, and now I'm not working. So I don't want to be dependent on just one particular ETF or a few. So I decide to go with, right now I have 40. I didn't pick that as a specific number. It just happens to be where I'm at this time. Um, Another thing, guys, is that, to be honest with you, even though I have 40 ETFs, I don't really see it as being that many because a lot of them come from the same ETF providers, right? So say, for example, from Hamilton, I have three. So I trust Hamilton. I've had HYLD for a long time. I had HDIV before. Now now I have S Day and Q Day, right? So currently 3 positions from Hamilton. I consider it almost like one, right? I own ETFs from Hamilton, and I trust them, so I trust all of those ETFs. Um, let's see here, guys. Oh, another thing that I like to consider is the fact that I have positions, I have ETFs, both Canadian listed and US listed. So if I was being a Canadian, if I only had Canadian listed ETFs, I probably wouldn't need 40, right? I probably maybe be in the 20 to 25 range. But because I also have US listed ETFs, I'm trying to take advantage of that market as well, right? I'm trying to squeeze as much income as I can out of their ETFs. So that's the reason why I have another, 15 or 20, because I'm taking advantage of both markets. Now, there are times when I sell off an ETF. Everybody does, right? So why do I sell some of them off? Well, for me, a lot of it has to do with organic growth. And by that, what I mean is that I'm trying to grow my portfolio without adding money to it, right? So I might have a position that I've held on to for a year or two, and I have a lot of capital gains, unrealized capital gains, and it has a reasonable distribution, maybe a 10% yield, where I've decided to sell that position, realize the capital gains, and move my money into something that's paying a higher monthly distribution. And I know yield does not equal total return, but I'm looking a lot at what is my monthly income. And as long as my portfolio's growing over time, then I'm happy with that. Okay. So, and I don't want to just buy funds that have high yields to start and then their yields are decreasing over time. I mean, that's not the goal. Obviously, the goal is to buy income funds or covered call ETFs where the income is growing over time as well. So, but yeah, so I'll the other thing is that if I have a position that's relatively small, maybe I bought 10, 15, 20 shares to start, or I have 50 shares, and I'm not really adding to it anymore. In some cases, the share price goes up too fast, and I feel like I missed the boat, and now I don't want to overpay for a position, so I might stop buying it, and then something new comes out, right? So I kind of felt that way with USCL and QQCL. I had some shares, not a lot of shares. The price was up. I wasn't really adding to these positions. And then Q Day and S Day came out. So I decided, you know what, I'm going to sell off my two positions and then I'm going to add these other two. So there's a lot of factors that go into it. You have to really do what works for you best, and you have to feel comfortable managing that portfolio. So for me, having 30, 40, 50 positions, it's not really a big deal. Uh, there is more work in terms of tracking your monthly dividends, right? Because you have so many ETFs to keep track of. But again, that's a personal decision. I don't mind doing it. I take the time to do it. I enjoy doing it. But like I said, it's probably best not to have too many little positions because then that's almost just a waste. You're better off to have conviction in the ones that you want to own and build those positions up to a reasonable number. Anyways, guys, I hope that this helps a little bit to maybe you guys understand a bit why I have as many positions as I do. Maybe we can have some conversation in the comments below. You can let me know what your strategy is. Maybe you have a set number, 10 positions or 15 or 20, and that's it. You stick by it. Or maybe you're like me and you kind of just go up and down depending on, how you feel, like what's new, what you're selling, what you're keeping. And anyways, guys, thank you for watching the video. And until next time, bye for now.